Good. How are you doing, buddy?
I am much better.
All right.
So let's jump in, but I kind of want to start it at referencing the article that was just released by Stephen McBride over at Risk Hedge Report, where he titled it, "Aurora Cannabis is Dumping Its Pot, which may be a sign it's all over." And essentially, it was a 1,000-word article saying there's too much supply for the demand. And he states that in just 1 year of Canada's historic pot legalization, pot producers built up a massive surplus of pot. In fact, only 4% of pot produced in Canada in July has been sold. Now, these guys are the big guys. I'm talking about Cronos, Canopy, and Aurora, and that's where he's focusing on. And I want to lead in with this as far as, are these big three sucking the wind out of the rest of the Canadian market and United States market? And is this why the stock has declined, your Ionic Brands, to 95% or to 4 cents, I think, today?
Yeah, look, from my perspective, the Canadian market, because it's more mature, it's been, the capital markets have been funding cannabis business in Canada in anticipation of legalization. I think that they have overbuilt. All of your big LPs in Canada have overbuilt. There is a tremendous amount of supply. And then you have the issue of the lack of retail establishments or outlets for the product in Canada. And I believe that is having a detrimental impact on the rest of the cannabis sector in terms of the capital markets. And that is rolling over down into the U.S. companies and multi-state operators. And the valuations that we have demanded in the past are being impacted by the lack of, financial fundamentals in the Canadian market. So I think there is a lot of overlap that's happening. I think that the perception is that the industry as a whole, including the U.S. market, is not going to be profitable anytime soon, that business fundamentals are going to be difficult to achieve. So yeah, I agree. I think there's, some headwind related to what's happening in Canada and the oversupply and their ability, those Canadian companies, to reach a profitable status.
Some of the investors that I would go to and say, hey, I got a pretty good opportunity here. The fundamentals are great management in place, and they're getting a lot of traction and momentum. I mean, they've almost closed up and said, I'm kind of in a wait and see position. So obviously they see the risk has increased for them. Why should investors believe that the equity has any more value than it is? Is it undervalued and just waiting for the market to turn around?
From our perspective, from Ionic Brands, we believe that our equity is extremely undervalued. We have, obviously, along with the rest of the market, we've taken a 77 to 79% hit or haircut in terms of our valuation, just in looking at cannabis as a whole. And then, of course, from our perspective, we've had challenges with early selling and short selling in our stock. Obviously, that has created more momentum, negative momentum with the retail shareholders. They see that, and then it translates into fear and panic. And I think that is what we're seeing or witnessing across the cannabis sector is panic, and trying to sort through and find the companies that have fundamentals, some type of fundamentals, whether it's gross margin, revenue, top line sales revenue, market share, companies that are close to reaching EBITDA positive cash flow or cash flow positive. Those are the companies, those are the gems that investors are looking for. And I think that those are far and few, between right now. And I know from our perspective at Ionic Brands, that's what we're hyper focused on, is reducing that burn rate, getting to an EBITDA positive cash flow position as quickly as possible, which we've been, shooting for this quarter. We believe that if we reduce our burn rate was just over $1 million a month in operational burn. In the month of October, we've been able to successfully reduce that below 180,000. And we're starting to get gross margin lift in Washington due to a lot of the fallout from competition. A lot of companies they're undercapitalized, are leaving the market or are going out of business altogether. So it's that first phase of consolidation, I think, that we're seeing across the board in cannabis, and it's really is what refines and defines the next phase. Let's call it Cannabis 2.0 in the States, and looking for companies that can provide leadership on basic financial fundamentals.
Yeah, only the strong survive. I'm going to get to that question on cash and working capital levels, but I want to ask you, just kind of look in the mirror, basically ask a little bit about if there's any fault. Was there any decision-making regarding financing, corporate direction that played a decline in this your current situation, or why should investors believe your current choices will lead to improvements coming out through the other end?
That's a great question, and that's a fair question. So I think that, from Ionic Brands' perspective, we started with a management team that was entrepreneurial, is entrepreneurial, has been through these types of headwinds, has had to manage companies in a downturn, manage through consolidation phases, and I believe that we've successfully been able to do that. There's a lot more work for us ahead, but we read the tea leaves, so to speak. Our financial partners in Canada gave us a heads up in July that there was going to be difficulties in the capital markets. From their perspective, from management perspective at Ionic Brands, we started to immediately look at how we can restructure the company and pivot very quickly. And we've done that in a responsible way. Looking back on, what we could have done better, there was so much money that was being made available to us. We were very aggressive in our growth strategy, in our growth plans. And looking back, maybe what we should have done is managed and maintain that growth or that excitement, that passion to grow the business so quickly. And rather than going out and grabbing as much retail shelf space and spending 30 cents in every dollar of working capital on marketing and brand building, pulling that back. So there's definitely things that we could have done differently looking back on it. We did not anticipate up until the warning signs from our financial partners in Toronto. We didn't see this coming. And so I don't think anybody saw this coming. And especially with Canada beginning to call, mature, if you will, in terms of their market, and then that growth opportunity shifting down to the States. We all believe that there was another leg of being able to raise capital from the capital markets perspective, and that dried up very quickly on us. So we were caught off guard by that. I wish that I could have done a better job of managing the amount of cash that we had in treasury, but we have since made the adjustment. We have since restructured the company, and so we're on the right track. We're on the path to profitability, and we again are hyper focused on fundamentals of EBITDA and cash flow positive.
I had somewhat a similar situation. I think all business owners go through this. I was running an e-commerce business, and I spent a very good portion of about $500,000 a year on Google PPC ads. And then when Google got rid of the side ads, they just only had 4 on top. It changed. So there were 30, 40, 60 competitors now competing for 4 spaces, and my cost per click went from $1.25 to $4.50. It made it really difficult to make any money on this. So I had to find a pivot to find new sources of leads. My question is, what happens is a lot of times when a downturn happens, people business owners start cutting back, and one of the starters is like, let's cut back on marketing, or let's cut back on this. I mean, are you is it affecting any of your lead flow, your customers? I mean, are you hurting this to the detriment of a long-term Ionic Brands?
No, that's a great question. So that's one of the things that, from a management perspective, from a leadership perspective, you need to balance out those cuts while you're cutting. You want to make sure that you're not cutting into the operating fabric of the business, making sure that that those cuts are well thought out, they're made responsibly, and that you don't create other problems or unintended consequences that can have a negative impact to the business. So and that comes with experience. So being able to pivot as quickly as we pivoted. Moving from, our first phase of cuts August 1st of this year, our last phase of cuts was October 1st, and now really, again, emphasizing just focused on those fundamentals. We think that we've done it correctly. We think that right now, at this moment in current state, that we've struck a fine balance or a fair balance between, our sales and marketing requirements, making sure that we don't damage the brand, make sure that we don't damage the brand equity that we've invested so much money in building. We've shifted human capital and working capital into the direct sales team and the sell-through, managing the sell-through through pop-ups and in-store activations to ensure that, that we can continue to move our inventory every 30 days. So it's a balancing act for sure. And but we think we've struck the right balance at this point. We can always make more cuts, but at this point, what you begin to do is really cut into that operating fabric that will create other unintended consequences that can have a negative impact.
Yeah. There's a lot of moving parts. I mean, do you have visibility on a zero burn rate, rebuilding balance sheet, an idea or visibility on profitability? But the moving parts is interesting because I'm sure you have some debt and there's an interest payments coming due. And what are creditors going to do? Are you kind of saying, back off or renegotiating those terms or what?
Yeah, absolutely. So we have been working with our convertible debt holders. They have been fully behind the company. I will tell you that we could not have maintained the strong relationship that we have with our financial partners without management making the changes that we had to make. So our financial partners had to see that management had the will, the desire, and the means to restructure the business and to focus on, again, those fundamentals. And I know that I'm repeating myself on those business fundamentals, but they're so critical. And management believes that by focusing on that, that we can come out on the other side of this in a much more positive format. And our financial partners agree with that. And we're working very closely. We have update calls with them weekly. We go through our cash planning. We go through our cash flow analysis. We discuss, different issues and challenges that we're having, evaluating any type of disposition of assets that we have, what we can do with those assets, how we can leverage those assets. So it's a very interactive partnership that we have with our partners in Toronto, which has been very helpful. So, at this point, we are, discussing with them different ways to restructure our debt. So far, those conversations have been very productive. And we're headed in the right direction. They want their greatest desire is that management can pull this off and provide a return on their investment and a return for our shareholders. Yeah,
I think the lesson that most people listening to this will take away from this, entrepreneurs go, look, headwinds you're gonna hit headwinds, and the worst thing you could do is go into a cave and go, oh, geez, I'm screwed. No, it's more about communicating with all the stakeholders and telling them exactly what's happening.
No, that's it. Look at John. That is the key. I mean, you cannot go into a hole. You cannot go and hide. It's very easy. It's difficult. It's extremely difficult. For entrepreneurs, including myself. I've started 7 companies. I've exited 4 of those companies over the last 28 years. In those 4 successful exits that I've had, I've gone through downturns in every one of those businesses. So, it's really, again, it's just about execution and, being able to focus and refocus your energy to be able to look past the mountains that are in front of you in terms of your burn rate, your negative cash flows, your negative balance sheet, and to see past that, and then to create a path through all of that debris that leaves you at the end of, that path that sets the company up for success. There is going to be several new rounds of cannabis and the cannabis sector, and call it for the United States, from a U.S. perspective, cannabis 2.0, cannabis 3.0. There are going to be more consolidation periods. There's going to be constant headwinds from a legislative perspective to from a financial perspective. There's many wild cards from a regulatory perspective. So it takes a lot in this industry, especially. It keeps you on your toes, and even much more so than any other business that you can think of, because it's an industry that's 7 years old recreationally. So a lot of challenges, but it takes special talent.
Write the rules as you go.
Well, no, that's exactly right. I mean, all of us, in the industry are writing the rules, and it seems like they get rewritten every month, every quarter. There's something new to deal with. So, I think that, again, going back to our financial partners, those ties are strong, and we're all working together to make sure that we can provide shareholder value at a future date in the near future.
Yeah, I also want to point out that when I saw the downturn, I said, look, this is what's happening. I told the manufacturer, they supplied about 80% of the hearing aids that I sold in the e-commerce business. I actually presented an opportunity. I said, look, here's the headwinds. Here's why my sales are like this. Here's an opportunity for you to become a bigger partner in my business. Because I said, look, if you want me to sell $5 million worth of your hearing aids, I need $500,000 in investment in marketing. I mean, It didn't work out exactly that, but I presented the opportunity, and we kind of met in the between.
No, and that, that's what it takes. That's what it requires. I mean, if you can get two groups together, two parties together that have a common goal, and you can agree on how you can execute, and you can show that you can execute. If you have a proven model, that's what matters. We believe that we have that. So, we're moving on, we're moving forward, and we're moving through the headwind and, through the debris that we're currently working through in the markets that we're operating in.
So let's talk about regionally stuff, like what's happening in Washington and Nevada, and why investors believe things will improve, especially in all the negative vape press. I mean, it's daily. I mean, you see something about vape pens and flavored vape pens daily.
Yeah, so the good news is for Ionic, and especially in Washington, where flavors were banned, our top 5 competitors were providing flavored products. In the state of Washington, we had record sales orders last month in vape. We have record sales orders this month in vape. We've set new sell-through records this month. In the past, because of either supply chain or pesticide problems, we took a big dip in sales early in the first half of 2019, H1 2019. And in the state of Washington, we are squarely back on our feet and enjoying a lot of success right now in that market. Whereas when you look at Nevada, you have a different situation happening or developing. So, in the state of Washington, you have an established brand, you have local customers, they trust these brands. So we've been fortunate to have that brand equity here in Washington. We have that in Oregon as well. But in Las Vegas or Nevada, it's a very transient market. So we have seen a 20 to 30% decrease in vaping in Nevada. So it's a bit more challenging there. But we expect that this is all going to be temporary. We believe that, the black market has been widely responsible for producing product in either recreational markets, or we've heard and read the stories of companies in California that have one facility that's manufacturing and selling to the legalized rec market, and then they have another facility and another location that all of their failed pesticide product, oil, flour, goes to the back door to the black market. And there's a lot of that still out there, especially in California, where you've had the black market and medical around for 20 plus years. So, but really, I think, when it comes down to the recreation markets and vape, the consumer trusts the brands that have been operating. We've been operating here for 7 years, never had an incident. So I think we've been able to gain the trust of the consumer. Speaking of brands,
that Zoots acquisition, what's going on with that? How'd that investment turn out?
There's a lot of challenges. Again, we started restructuring the company, had to look at our profit centers. We have recently restructured all of the manufacturing facilities. We've exited leases for our edibles manufacturing. We have brought on a new co-packer in the Washington market that's going to be manufacturing our edibles, our Zoots products. We really haven't seen an uptick in the edibles. But we're continuing to focus on that. We're also launching the Zoots edibles product or line in the CBD market. So the entire SKU, all the SKUs, all the products, we're partnered with a local company in the state of Washington that will manufacture a pure CBD line for us. So we're excited about getting that out into the market. We're really kind of shifting the edibles business right now into the CBD space. That seems to be where we're getting more traction. So that's our main goal for our Zoots line, our edibles line. And then we'll continue to sell those products in the state of Washington and look for licensing agreements abroad.
I think you have a lot more potential to sell something legally than in 50 states than you would in 11 or 13.
Absolutely. Yeah. So we're pretty excited about that. So that's an exciting new development for us.
Yeah. So it all comes back down to the numbers, the margins. I mean, do you have a sustainable, profitable engine going forward? I mean, can you talk about what this looks like in 3 months, 6 months, 12 months?
We have a path forward to profitability and a sustainable model. Absolutely. Like I said before, just to cover this off, we 72 days ago we had a operational fixed burn rate of about $1,070,000 a month. In the month of October, that is sub 180,000. So that's a substantial decrease in our operational burn, and we believe that we can reach EBITDA positive this quarter, Q4, and that we can reach cash flow positive in Q1 of 2020.
Is that going to require a new source of financing to get there, or? And I'm just curious, is this going to be? Yeah, it will. That's what we're working with our current financial partners on, getting that established and getting some additional working capital infusion, a small infusion of capital. Again, we've done all the legwork that we needed to do in terms of getting the operation shifted around and refocused on profitability and those financial fundamentals that everybody's looking for in the cannabis space. So that is our single-minded goal, is to reach profitability as soon as possible. And we have a path forward for that, and we have demonstrated that we're very close right now to reaching EBITDA positive cash flow. But it will require a small additional infusion of working capital from our current partner. So I'm curious, as there's got to be a lot of other companies similar to yours, comparables, suffering the same kind of headwinds. I mean, who are you seeing out there as similar-sized companies, suffering the same kind of headwinds? I mean, if you ever watch a boat race, when the wind dies, you're all sitting there. It's always funny. Yeah, look, I frankly right now, in the state of Washington, state of Oregon, not so much in Nevada, but absolute chaos right now in the markets. We're seeing everybody's been announcing cutbacks, layoffs, headcount reductions. So,
we're the whole industry is weakened right now and is starved for capital. And again, I think that the companies that can pivot, that can restructure, that can hunker down and get through this will make it through to the next growth phase. And, in my opinion, that's, 3 to 6 months away. And so we have to batten down the hatches, and every business has to do that. There's a lot of companies, private companies that are undercapitalized that have gone out of business. So everybody that I know of right now in the industry and my network, we are all feeling the same extreme pressure to perform and to restructure our businesses and to keep these things going down the right financial path.
So you said you think you see the second market growth or bump 3 to 6 months now. Is that due to the SAFE legislation or something else happening?
Yeah, I think that the Safe Banking Act is going to, if that gets passed, which is looking like very promising, I think that is a major inflection point. I think that opens up investment from U.S. investment banks, venture funds, obviously family offices, private equity, through various channels and funds of funds have been participating in cannabis. You see more and more of that happening now in the U.S. I think that this next go around, this in 3 to 6 months that I'm referring to, is going to be driven by U.S. capital infusion. And so I think the Safe Banking Act is going to facilitate that and could be a major inflection point in seeing valuations of companies come back from where they're at today.
Yeah, so you guys went public on the Canadian Securities Exchange. If the SAFE legislation passes, House, Senate, President signs it if needed, are you talking about migrating to an American stock exchange?
Well, we're already traded on the OTC market, pink sheets, OTC market, BB. We are considering filing a Reg A offering on the over-the-counter market in anticipation of being able to, access the U.S. capital markets in a more meaningful way. So that is definitely on our radar right now.
Beautiful. Look, John, I really appreciate the time. This is John Gorse with Ionic Brands, CEO. I think what you've heard here is every business goes through headwinds, and you've got to be prepared for the next win coming up and taking advantage of the opportunity. Never standing still. It's always moving. Sometimes you got to make some pivots, make some hard choices, but to me, it sounds like John Gorse is doing it, and I really appreciate his time.
Thank you, John. I appreciate your time.